More pressure on the markets, getting into the institutional side of things and really taking a look deeper into whether or not this contagion will continue to seep out into the traditional markets as well as the markets that support a lot of the crypto scene. So we're going to dive in deep. My name is Paul Barrow. Welcome back into Tech Path today. I want to get into it today around some institutional news as well as many other things. We'll talk a little bit about Gemini. We'll get into some things with a variety of different exchanges. Talk a little bit about Silvergate banks, as you guys probably have seen and heard around Silvergate in terms of their support level. We'll do all that, do some breakdowns for you, but I do want to thank our sponsor today. That is Bybit. Jump over to Bybit, get into the next level trading. We've got some pretty cool things going on during the World Cup. They've got a Crypto Cup kickoff. You can grab a share of 500,000 USDT in their prize pool. So if you guys are interested in going in and doing some trades, the way I use Bybit is shorting. It's a great platform for short trading, and it's one of those that I think is now starting to become maybe one of the most favorite for some of the traders that are out there. So check them out, use our link below, and also you can get zero spot trading fees right now as well. All right, let's get into a couple of things here. Speaking of Bybit, this came over from Wu Blockchain showing Huobi and Bybit announced their cold wallet reserves. At present, among the major exchanges, only Gate.io, MEXC, and BitGet were the ones who have not submitted. So this proof of reserve model, which really was kind of fostered by what was happening with CZ, it's now in play. I mean, we're starting to see this. You can kind of see Binance coming into there, all USD, setting in 64 billion right there, BTC, ETH reserves, USDT reserves, USDC reserves, and then BUSD reserves. So a good lineup there. You see Bitfinex in there, not completely in there, and then you've got OKX, Huobi coming in, and then KuCoin, and then of course Crypto.com and Bybit also. So more data coming in, which is good, I think, for the industry in general. No, I'm not defeated. I saw a note just come in. I have a little bit of a cold that I have young kids, so they're like sponges to germs. I thought I was going to escape it, but it did not. I am not defeated. I am here and living right through this with the rest of you guys. Don't worry about this. I'm fully calm and understand the kind of conditions of these markets. But I've had a chance to live through this before, so I've seen this in some pretty bad times of where the market has begun. The fact that we're starting to see this kind of rumbling around traditional institutions, this is where it gets really dicey. It is one of the things that I feel may cause some other pain. The question is whether or not it can cause enough pain to cause any more downtrend in the market. We'll take a look because I think there's a lot going to be rolling into this. Here was a tweet thread coming in from Grayscale. In the wake of recent events, our investors should know that the safety and security of the holdings underlying Grayscale digital assets are unaffected. And again, this is something that people have been concerned with. Obviously, there is more of that ongoing. And I think the question here, as we start to get into institutional finance that actually is really being affected here, and I was listening to Kevin O'Leary the other day, and him talking about, one, of course, the FTX issue, but also just institutional finance in general is without regulatory guidance that we would see less and less of that activity. This is a problem because it sets back the overall arcing market of crypto as a whole. That is a problem in the sense of when you think about this going forward and what this might do to the next bull run. It's a good thing that we're seeing this here in a bear cycle like right now. Obviously, this is the reason it's in a bear cycle, but the fact that we see these kind of, domino effects is going to be interesting to see how this plays out into 2023 and 4. Here was a little bit of the article right here. Grayscale saying products are operating business as usual. And this, of course, is all triggered because of the Genesis withdrawal freeze. And that has happened. There's a couple of things here within it. Grayscale said it's not a counterparty or service provider to any of the products. Genesis Global Trading is a separate entity and is an affiliate of Grayscale. The company addressed also Grayscale's Bitcoin Trust, GBTC, which it said remains backed by underlying assets, safe and secure. And they use Coinbase, for their deep custody. So I think that in itself is safe. But at the same time, there's some there's some rumblings around this that are a bit concerning. So you have to consider all things. And I'm not going to give you financial advice, but I can tell you what I do. And that is, and this is something we've talked about here on the channel for quite some time, is if you are interested in holding long-term, Bitcoin is one of my core. I do like Matic, and then I look at a lot of cash positions. Sure, I have ETH and a handful of others, but you have to be comfortable with that percentage of your overall portfolios. And I hope that right now within crypto, hopefully that's, for many of you, maybe that's less than 10%, good, less than 20%, okay. If you're over 20% in total, in your total portfolio in crypto, more than 20%, that's when I would start to do things for de-risking. And de-risking is simply going to cash, whether you do like other assets in the market, securities, gold, whatever that might be. Just de-risk a little bit, de-risk down to 20%. I think you'll be fine. All right, so Grayscale said, they also noted that it does not borrow or lend. Excuse me. Or rehypothecate or any encumbering underlying assets right now. So that's a big deal. This is not choking me up. Sorry about that, guys. This is not choking me up. It's just my voice, as you can probably tell, is about lost. So we're going to try to fix that here shortly as it gets going. There's a couple other things that have been happening too, and this is something that Ryan Selkis brought in that I thought was interesting in this tweet right here for context, showing that GPT shares still trading at about 40% discount. Okay, so I'm back. So for context, the GBTC shares are trading about 40%. Sorry, you guys, I haven't said through about 40% of discount. So what it would take is kind of this one-click concept of converting Bitcoin on what they call a Reg M, Regulation M relief. And there are some people that are saying maybe this should already be in play, because there's a lot of investors that obviously are hurting in that position. So I think this is something that we're going to have to keep a close eye on, because this one right here could have obviously some contagion effect as well. So that one is a big one as well. Silvergate is the one I'm most concerned about. This one right here is capital shares now pressured by the FTX debacle. And when you look at Silvergate, their underlying aspects are really the bigger picture that I'm concerned with. And because they've really kind of been connected to so much in the space. So digital assets focused on, obviously they're a registered US bank, but they drew a lot of attention from Wall Street and their exposure, obviously because of the FTX Alameda deal. But when you look at the big offering, which is the one that concerns me, is institutional investors for Bitcoin-backed lending. This to me is the golden nugget that could be a big concern if, in fact, we're dealing with any kind of shenanigans or issues that Silvergate could be facing. So this one is a big one for sure. The balance sheet is built so they don't end up in a situation like some of the crypto industry players. But there are some people that have said, hey, wait a minute, maybe not so fast. So the entity does use its sheet to provide liquidity for clients while also, kind of keeping a capital position overall. And then the high liquidity balance sheet consisting, this is 1.5 billion in loans and about 13.5 in liquid. securities and cash, which is good on sheet. That looks really well. I want to jump to, there's going to be a video here. Actually, I want to jump to that video because this is a good one that kind of goes into it. This is coming from Keith McCullough. Real quick, let me play this for you guys.
And there's something else that came to my attention on Friday that I want to warn people about, and it's a stock, and it's called Silvergate, and it's symbol SI. And they're the financial so-called bank that allows all these transfers and things to happen. And they have about $14 billion with a B in deposits, and they're largely from these offshore entities. And get a load of this. They transfer last year $1 trillion between these offshore entities and customers. $1 trillion off a 14 billion deposit base. And this name was brought to my attention by who I think is the best bank analyst on the planet, and that's Porter Collins of the Big Short fame. And he thinks they're in the process right now of having a run on the bank. And they put out some bogus press release on Friday saying that FTX was only $1 billion of their deposits, and they didn't have any loans to them. And the stock went up after ours Friday. But as Porter said to me, it's a deposit story. It's not a loan story. If they lose all their depositors, there's going to be a run on the bank.
Yeah,
so
it's not just FTX either. So, I mean, that's the whole point.
It's not FTX. They do business with the worst of the worst. And the crazy thing is, these guys are so stupid at SI, right? The CEO's son-in-law was the head of risk, so they figured out something was wrong. And before FTX went bankrupt, this is what they promoted. It says, this is from their website. It says, life as a crypto firm can be divided up into before Silvergate and after Silvergate. It's hard to overstate how much it revolutionized banking for blockchain companies. And that was endorsed by Sam Bankman-Fried, founder and CEO of Alameda Research and FTX. So,
Nuts.
It's crazy. And they put this thing out saying... Okay, so you can kind of see
here, he is not a lover of what's happening with Silvergate. And again, this puts a lot of pressure on, as he mentioned, not necessarily just the FTX Contagion, but a lot of the additional companies that are tied into this support infrastructure of how liquidity and loans are going to be managed. So that in itself puts a lot more pressure on the overall system of crypto. And even to a certain extent, Bitcoin, obviously, for the fact that we do see a lot of people in loans with Bitcoin and also utilizing it for assets. So that in itself, I think, is a little bit more risky on the top side. Gemini dollar now, lending rates spiked as high as 73% on Aave during this Genesis freeze. And a lot of people are asking, is Gemini now at risk? And I think this is a question that has to be asked. Gemini, of course, if you guys know, the biggest question mark here is their tie into institutional accounts, which again starts to create that kind of that doom loop of institutional funds that are going to start looking at potentially moving assets or repositioning assets, which would be a problem because that essentially is a bank run. And any bank run, as I've said before, if you guys have watched me long, I've been involved in bank runs before with my businesses where companies, banks, were at risk. Everybody, the depositors are all trying to get out, and it ends up just seizing the system. And in most cases, the assets are not there. You end up going through an FDIC insurance recovery, and it's not a fun thing. So these institutional companies, they understand that. They understand where their risk is to a certain extent. And I would assume that if I was running any institutional fund of any sort right now, my radar ears are up very high, looking not only the contagion of what FTX could be doing, but also the contagion of all the periphery, and that is companies and institutions like Silvergate. So how this plays out, them being a publicly traded company, a lot of this, the way that they're managing it, this I think still is offered and run by, to a certain extent, the SEC, and this is the thing that starts to question, or at least starts to put questions at most. I think this starts to put a lot of pressure now on a speed run for regulation. And when we deal with speed runs on regulation in any past history around any industry, typically overregulation is what is usually enacted. So that's the concern right now that I think a lot of people are facing. So if you are in, and this is something I pitched to, for you guys for a while, is self-custody. I can't really explain that much better than that. And if you don't have, or you're not interested in the hardware side, get into a software wallet the best you can. There's several of those out there that you can utilize, but get into as much self-custody if that you can, get into cash positions, and be ready for what we are really dealing with right now, and that is the rest of this macro pressure, as well as now the financial and the potential contagion pressure of the overall market. So interesting times for sure. We'll definitely take a look at I'm going to get you guys some coin holdings breakdowns. I'll give you guys a little bit of a share on what's happening there. CZ, in the meantime, CZ is looking to possibly into acquiring Genesis loan book. And I think with, I don't know though, I look at this and I think, is CZ really going to do this? Is this another fake out? And again, this is a little bit different because it's a loan book. So to a certain extent, I mean, it depends on how those loans are structured. But he talked a little bit about here. He's begun reaching out for more information on the state of Genesis balance sheet. Hey, listen, they got a lot of cash right now. I just saw that in their discovery. Genesis loan assets. Genesis includes $2.8 billion in active loans, and this was in the Q3 2022 report. And then another source noted that any approach is likely to be rebuffed by Genesis parent company. Obviously, this is Digital Currency Group. That the figure would be north of $2 billion would need to be floated. So that's a lot, but not necessarily something that couldn't be, pulled out by institutions. Because I mean, you think about this, that's a really good loan book. And if Binance were to come in and make this play, man, they're just getting into more and more centralized opportunity. And you even look back on FTX, and had it, not, maybe there was a chance at it, that it could have been saved. And when I say saved, meaning the opportunity of being able to bail out, and not necessarily bail out, but buy those assets for maybe a certain amount on the dollar. Obviously, the hole in the balance sheet was the big problem there. But anyway, I think the key here is that, and you guys have seen it, as you've heard me talk about this for a couple of months now, is there is trouble afoot here in the markets. And I have a new theory, and it's what I'm working on and have been working on for about the last 30 days, is that I think we are in for a double dip and a double pump. And let me explain that. So when you look at the inflationary pressures, the scenarios that have happened with crypto, and a lot of analysts, I don't know that they necessarily look at just history, but they may not necessarily look at where the crypto contagion can be. We feel like we have a good handle on that, but it's the flow on contagion into other markets. So when I mean double dip, what I mean by that is a double dip in recession, meaning we may get a lift and then another dip in further into the recession. What I mean by double pump is where we get a double pump on inflation, meaning a softening of inflation, as we have seen in this last report, though there is questions right now as to whether or not that was fully accurate. That's a very interesting thing, thinking about the timing of how that report came out. When you tie that to midterms, et cetera. But a double pump, meaning that we start to see inflation go down, which is what we've seen, and then we see an immediate spike coming back. So it's very possible in December, and especially in January, because of Q4 earnings, we could see another spike in inflation. If that occurs, then again, that's going to put additional pressure on all markets, including the securities market. Real estate's already got a lot of pressure on it right now. We are dealing with bloodbaths really about almost in every asset class out there. And, to a certain extent, even if you look at gold. But there are some opportunities in there. The key are smart trades, swing trades, getting in on certain aspects based on some of the fundamentals, and being ready in the best kind of cash position you can be in. So just get in there. I do want to jump over to this last video right here of Kevin O'Leary, and let me refresh this so we've got it in the right spot.
Percent, and I lost my money. I get it. I'm a diversified investor. I make mistakes. This is one of them. But I learn from my mistakes. This won't be happening again. If I'm going to put serious capital to work in a broker-dealer, in an exchange, it's going to be one that's regulated, that has transparency, and has the same rules of test that every other exchange that deals in stocks and bonds has. Because everybody's saying the same thing. It's great to be a retail investor and trade a few $1,000s worth of crypto. And if that's what Binance is going to do, good for them. But every single institutional investor is going to look at this and say, okay, can't play with this structure anymore because there's not enough transparency. I'm going to wait for the SEC or whoever it is going to be, the Fed or whoever, to regulate this stuff. This is actually a turning point for this industry. It's a maturation for this industry. That's what's going to happen.
All right, so I think his point there that he made, and the one that caught me off guard in the very beginning, and it was, if I'm going to put this into play, into an exchange, to me, this is a completely different position than when O'Leary has been on crypto in the past. Now his taste is very bad. Obviously, he's dealing with regulatory scenarios that play into this, and I think that is probably going to be the thing that, for at least O'Leary, whatever we're dealing with, at least on a broker-dealer side, remember, he's talking about going to Canada because obviously their position, I don't know if you've heard him talk about, where and what has been happening within Canada in terms of their securities policy around crypto trading, which they've been able to get regulated. That's one of the good thing about Canadians right now. They do have regulated broker-dealers in Canada. And I think that is going to be a factor here in the United States. So I don't anticipate much stalling from DC on this right now because it is starting to roll into a political play. Crypto is now, and along with what we've seen with FTX, this is now part of a political play, both from the conservatives and also from the Democrats, that I think is going to play out in maybe a little bit of an over-regulatory scenario. And I fear that at some point we're going to deal with something in this space to where we will most likely see some sort of test or accreditation required for you to invest in these kinds of assets, digital currency, digital assets as a whole, much like you do if you're going into the regular, accredited investor space, outside of us seeing, the kind of potential of security tokens starting to essentially kind of become the thing. And I think that's where it's going, guys. I think we are going to be dealing with almost every altcoin out there going into a security. They will overregulate this. There'll only be a handful of altcoins. You could probably put that in the 150 mark that are going to be coming into that position, and a lot of projects that can afford the regulatory fees and attorney fees, primarily in accounting expenses, to be able to pull that off. I think that is the future of where that market will go. Will it happen in the next year, next 2 years? Maybe. It's very possible we could see some of that, especially with the pain that the market is seeing right now. So we'll get into some questions. I know we got a poll coming in. Let's take a look at that one. All right. Is GBTC a better buy right now than Bitcoin? Nope. So 60% no on that, yes on some. I mean, think of that. The discount is there. I mean, it's down 40%. If you look at it from a trade position, it's not exactly a bad thing, but I understand your position on, not your keys, not your coin. Completely get that. Daniel comes in. Kevin got his wish when he said he wanted a big player to go zero. Yeah, only problem was it was the player he was in bed with. That was a big one. O'Leary also said he would reinvest in. I listened to that, Rob. It was over on Banter, and when I heard that, I almost thought the question was posed wrong at first, and I re-listened to it. I'm like, no, Rand said that straight up. There is no way that you give this guy a second chance. This is a bad actor, and even if he wasn't a bad actor, his skills at trading do not outweigh his skills at just general common sense. This is a problem. We cannot let this guy back into crypto. He needs about 10 years of maturity and a lot of pain. That's what changes people. So that I'm not at all with that. And I'm still surprised that O'Leary was still looking at that from a sense of being able to understand what was happening within the whole confluence of FTX, because I think now we're dealing with scenarios where a lot of VCs are looking at potentially filing fraud charges. That would be a big deal if that comes through. Sorry about my voice, guys. This this week has been a little weird. Not because of this, just, when you have, 7-year-olds running around the house, they're like little, bug magnets. Javier comes in. What about BUSD? I'd be too paranoid. What about USDC? Should you? Okay. All right. So if you're in stable coins, I can't give you financial advice. I'll tell you what I'm doing. All right. So Binance, I feel like for me, it's Binance US, but some of you guys watching is Binance. I feel like Binance is a safe haven. Obviously, a lot of cash, liquid. There's still a lot of activity in this market, so I don't necessarily see that moving. BUSD is kind of the preferred stablecoin over there, obviously, because their play with USDC, which ended up having a bigger impact on USDC and Circle than was initially. We actually called that in the video when we released that a couple weeks back. When that happened, I said, this is a problem for Circle and USDC. As far as USDC is concerned, I know you guys don't want to hear this. I would go to cash. I would take that stable coin. I'd move it to cash. I know the inflationary problem on cash. I completely get that. But right now, under the guise of what's happening in the marketplace, the contagion rollout, we've got to step back and take a look at where this market is. I think and I fear that this is going to polarize the markets in general, which means there's probably going to be very little movement, a lot of sideways action, kind of like what we're seeing in Bitcoin right now. But it does mean that we're going to see some liquidity issues as well. So you just don't want to get caught in these kind of scenarios. So it's a tough one right now. I totally agree, MT. There must be trust in the market. Otherwise, the market will not improve. And that is the key. All we have to let this do, first of all, you need two things here. You need a lot of this contagion to finally go away, meaning the last of the octopus tentacle has reached its last point and the last big guy is affected. That's step one. Step two, just a little bit of indication that regulation is underway. Once that happens, and I don't know if you guys saw, Tom Emmers was also advanced up his position in DC. I can't remember if he's the majority whip, I think now. But the point is Emmers is a very crypto-friendly, blockchain innovation-friendly. You guys should follow him. He's out of Minnesota. And I know he's Republican. I completely get that. But you should follow him, support him, let him know that he's been on our show before. And I like his thinking. I do also like his position against Gensler, which is, think about this. Had Gensler just let this pressure off, regulated, it's a lot of hindsight, but the point is this could have been regulated much earlier than it has been. Mark Nelson coming in. I'm already locked in Gemini, so just have to write it out and see what happens there. That's bad news on that one. Hard to even DCA, Jen. I'm not sure how to. Risk right now is tough right now. I agree with you. Trying to adjust to risk right now, I feel like we are in a little bit of a waffling stage, but I do fear that we are going to see some more pressures from the contagion. And then you add that to the macro effects that most likely will hit us in December. It's not going to be a good Christmas, guys. Just get ready for it. These kind of things will happen, and we need to be dealing with it. Let's see here. Is this the end? Listen, Bitcoin and crypto is not going anywhere. This is it's funny you asked me that. Short story. Is this the end? There was a blog post that went around the Valley in 2000, and it wasn't because of the millennium. It was people asking because of the fall off in the dot bomb that we really dealt with in 1999. This blog post was famously written, and it was, is this the end? So many people ask that question. Is this the end of tech? Is this the end of the future of the web? And I would go on to the same event. Bitcoin and what's happening in blockchain, we are at the very genesis of all of this starting. And when you are at the genesis of anything, these kinds of mistakes, mishaps, and problems occur. But it's the beauty of the market self-correcting, self-healing. I think the regulation, unfortunately, will be the thing that brings this to a proper position for the market. So I'm still fully in on this. In terms of my position, of what's in blockchain and digital assets, I still have a digital asset position. We'll always retain a digital assets position. Bitcoin is not leaving my balance sheet. It's always going to be there. It's where you hold it. That's the key, self-custody. Brian comes, do you think Coinbase is still safe? DEX is looking good. Yeah, I think you're right. Decentralized exchanges definitely been moving way up on the market in terms of overall volume, which you guys have seen obviously with Uniswap and etc. It's been pretty interesting for sure to see. But I don't think we are in a position right now where you just have to stay away from these exchanges that could have lingering effects into FTX, and that's my concern. It's funny. We got an email from Gemini, and the situation was pretty straightforward. They were trying to reserve everybody saying, hey, everything's okay. Them essentially trying to get everybody to calm down. This was 2 days ago. And whenever I see those kind of things coming, oh, everybody, everything's okay. Everything's fine. Don't worry. All is good. That is when I start to worry. So just watch your notifications out there. Kevin O'Leary or Meet Kevin. Well, both are a little bit sensational. Meet Kevin, his failed government attempt, but he's a pretty good real estate guy, I think. And trader, I think he became a good trader in the pandemic. Listen, Meet Kevin versus Kevin. I would still say Kevin O'Leary, because Kevin O'Leary has invested in businesses. And when you invest in businesses, you know that 70, 80% are going to zero. There's only a 1 or 2, 3 out of your 10 that hit. And then maybe 1 out of 100 that go vertical. So these are the kind of lessons you learn in investing, but more importantly, in general around business in life. You start to understand you're not going to win every race, which I think is a problem with crypto right now. So many people believe that it's just always up, always up, always up. These are the kind of things that will continue to be a big deal. I agree with you, Daniel. Proof of reserves and proof of liabilities are needed at the same time, because if liabilities, good balance sheet guy right there, liabilities and proof of reserves, very key there if you don't have the capability of being able to handle your liquidation. So lots happening in the space. We're going to be doing a live at 3. If my voice can hold, which I think it can. It's getting better, I feel like. We're going to do a live at 3. It's going to be a big one on retail contagion and what that might look like, because there could be some situations playing out into that as well. So make sure and stick around for our 3 o'clock show. If you guys are not in the Diamond Circle, make sure and get in. It's really easy and it's free. It's our newsletter. It helps you keep ahead of these things in case you're not always on top of this. At least you get it in your email inbox to help you guys through. All right, thanks for the super chat, guys. Yes, for sure. We should show you how to do some. Yeah, we're gonna do at least a rundown of the wallets for you. Some of the hardware wallets, some of the software wallets, and give you guys a rundown on that. It's pretty simple stuff. It's not that hard for anyone that's watching our show. You can do it. All right, you guys want to catch me on Twitter? It's @Paul Barron. We'll catch you next time right here on TechBath.